Hi, this month's video is going to have a quick review of the last 2 years to try and put that in context so we understand better where we are today, but it's mainly going to be focused on an outlook for 2022 and what we think that has in store for investors. Now, if you went back 2 years and I told you at that time that we're going to have a global pandemic and all the major economies would shut down for an extended period of time, very few people would think that markets would be significantly higher 2 years later. So what drove that? Well, really it was two things. We had very significant government spending through deficits, so borrowing, injecting money into the economy. And we also had very significant money printing from central banks through a thing called Quantitative Easing, QE. And a lot of that QE ended up in the financial markets, driving up prices. Now, the environment we're in today is very different. Governments and central banks are behaving differently, and lots of things in the financial markets are different too. And I think it's really dangerous to extrapolate. So let's look at this year and what we think it has in store. Well, we think the next year is actually going to be very difficult for investors and potentially quite traumatic for some. So you might ask, well, what's changed? Well, if I go through the things that have been supporting markets, government spending and QE, they're both coming down a lot. So government deficits are being brought under control because people believe they have to be to safeguard the financial viability of the states. And QE, well, we're experiencing very high inflation and a lot of wealth inequality, and central banks around the world are talking about stopping it or even reversing it. So the money that's pouring into the markets from that is going to stop. The next factor, which is very important, is inflation. Because actually, what is inflation? It's a reduction in the discretionary buying power that the average person has. So in the UK, we'll all be aware of the rising energy bills, which is a big part of inflation. Well, every pound you spend on utility bills is a pound you can't spend on Apple phones and Netflix. After this, we've got interest rates or bond rates in the market. Now, only geeks will be following this because it hasn't yet hit the equity markets, but bond yields have gone up quite a lot. And in the past, whenever bond yields go up, we quite often see eventually the market crack and you see a significant fall in equity values. And all of this, I think, is going to lead to what I think is the key factor, is a change in investor psychology, specifically in places like the US. So money has been pouring into the markets as people take the money they got from the government or money they saved by not spending on services during the pandemic, and they invested it in the stock market. In many ways, there's never been this amount of money going into the stock market over such a short period of time. Now, when you look at that, you've got to realize a lot of that money is what you might think of as hot money. So it's gone in chasing returns, and it could very easily flip to fear mode where people are trying to safeguard capital. Now, when or if we see a change in investor psychology, that will lead to a significant reduction in valuations in markets. So what do you do about all of this? So we are convinced that 2022 is going to be quite hard. Well, you've got to be cautious about taking risk. So when you're nervous about taking risk, you can protect a lot of your capital by avoiding the areas of the market that are very expensive or the areas of the market that have seen significant excess over the last few years, and that's what we're doing. The other thing you can do is you have to work to a plan with your investments. So some of the assets that we think are very overvalued today, actually we like them in the long term, we just don't like them in today's market at today's price. So I would expect if we do see what I'm expecting to happen, we'll be able to buy a lot of assets at much cheaper prices than they're available at today, and from that base to make people good money. So what I've just talked about is quite significant, I know, and if you have any questions about that or anything that you're concerned about, please get in contact and we'd be delighted to help you. I will personally be very happy to speak to anyone who is interested. Lastly, I must, as always, remind you that we're talking about investment markets. When you talk about investments, you've got to be aware your capital is at risk. And the very last thing is, if you like these videos and you'd like to see them more, please click on the icon here, the flying colours icon, and you will be able to link to them permanently. Thank you.